What's the Mike? What's the ticker? Or are they saying, or is that a private company? Okay. How about on U.S. markets? Okay. That's why I thought. But so there's probably even companies that are bigger that are private. But on U.S. markets, yeah, Microsoft takes the new top seat then. All right, let me let everybody know I'm in here. All right, I'm still dealing with an issue with my Dash Trader. Until I get that fixed, I can't see halt levels or get the high frequency stream, high frequency monitoring going. But I am watching on our little radar charts down there from Thinkorswim, which is real time. Just not high frequency. Oops. CMT. HDSN with a very nice shakeout recapitulation yesterday. HDSN. Market exposure, Dennis? Okay, yeah, that's a great question. You can just come in like in the morning and be like, where are we at on our market exposure? Are we close to doing something? Are we not close to doing something? Because I'm going to the beach, right? So it depends, of course, on what industry it is. But like, let's say the main market or growth, let's just say growth, which is, the most high octane stocks that there are. Growth is totally cash, no exposure. I'm having some trouble also getting meter to show. I don't know why it's acting up this morning. Showing. Gosh, let's see what happens. Mike, thanks for asking that. We did not because I didn't have the time this weekend. And I haven't had the time in the last few days. However, I do know that some of the things that I was thinking maybe are questionable are still questionable. So um, not much has changed from what I'm thinking going into the weekend on Friday last week. Right now, nothing's jumped out at me as saying like, okay, that clearly means X, Y, Z. So the last couple of days, things still remain sort of in flux. We're at a very influx moment here, and the curiosity is, will inflation slow? And it's very hard to say whether or not it's slowing. You know how stocks are. Even when they could be topping, they go up and down. So we're taking it one day, 1 week, 1 month at a time. ALNA coming up. Mr. M says ALNA, ALNA coming up pre-market for you momentum traders. Because of growth slowing and negative GDP, even commodities might slow. The negative GDP works for some particulars. For example, XLP and XLU. Even in a recession, those are going to be resilient, let's say. They might not correct, or they might correct less. But then there's also gold, but gold has been decorrelating as a flight to safety. However, gold still should work for crash protection. We haven't had a crash. There's a lot of newbies will say that we're in a crash, or that a crash is happening, or that yesterday was a crash. It's a subjective statement to some extent, but a real crash is extremely accelerated. It's the speed at which the descent happens, and we haven't had that. We haven't even had that, when there was the Ukraine-Russia drop. It requires you need to see between like a 7 and 10% drop in one day across all the indexes. We haven't had that, so but it doesn't matter. I mean, you can still go down more in a correction than in a crash, because a correction and a crash are kind of the same thing. It's just about speed. So a crash is a correction, but a correction isn't a crash. You see, so so we haven't crashed. We're not crashing. But yesterday was a pretty bad move, and the move after we had that big push up, I think it was last week. My dog freaking out. That was a crash. That was a very strong pullback as well. So I mean, we're having very strong drops, and we're definitely correcting strongly. Hold on, let me go tell the dog to be quiet. I don't know why that is, that dogs are so. What is that? So. Not the word dependent, but if I tell a dog, and this dog in particular, my dog here, if I tell a dog no, and I point at its face, no, I mean, he really feels shame. It's really funny. I mean, you don't need to do any kind of like physical, what do they call it? Uh, Punishment or whatever with your animals, especially with dogs. I mean, they have this sense of like, oh boy, I definitely do not want to disappoint my owner. I tell them that, and then they immediately the tail goes down under, and then the ears go down, and they put their head down, and I'm so sorry, and they try to lick you, and they go, come on, I'm a good doggy, don't be too mad at me. Pretty funny. Yes, I do have a ferocious pug, the cone of shame. I find it really funny how dogs have so much personality, and I'm sorry to you cat lovers out there. We have 2 cats as well, and I've had cats my whole life, and I've had dogs my whole life. But dogs have like 1,000% more personality than cats. Cats have a couple of characteristics. Dogs have a really wide range of characteristics. It's very interesting. Cats have like a couple of personality traits. Dogs have a whole bunch of personality traits. Really interesting. They have a lot of emotions. Cats, no, they're just like, fuck you. Yeah, I can't even call a cat, unless it's like the sound of food. You know, they don't know their names. I mean, they're different. I'm not plus or minusing cats or dogs. But yeah, anywho. Back to the program here. So anyway, PPI numbers, let's just call that out right away. PPI numbers came out. Those are producer price index numbers. You can consider that like the wholesale pricing. So if you're a producer of goods or services, it's sort of a reflection of how much you've had to raise your prices because of your pipeline costs, because of your supply costs, because producers are going to, sell to resellers, either retail or however the next people in line come in, consumers. They're going to try and, get those multiples down as best as they can to compete, right? So, producers often have the lowest margins. And it can be a more difficult business to be a producer than it can be a retailer in that sense. Margins can be much higher in retail. So anyway, producers is a good reflection of the real inflation going on out there. So the consumer price index is one way to look at things, but in a sense, producer price index is almost the better way to really find out what's going on. So today, we released this month's PPI numbers, and it was a year-over-year inflation of 11%, and a month-over-month of what it was expected, which was a 0.5%, and that was at expectation. So we're at expectation. So the market, tried to move on those numbers, but it really just stayed pretty pegged. What I am seeing right now, you might be able to see that in the top right of my full screen share for those of you in the group here, is oil. Oil is moving from about $104.50 to almost all the way up to $106 in just several minutes here. So it's moving fast, and it looks like it wants to appreciate today. Rates, another big factor on the market. They're down to 2.85% off of nearly a 3.2% resistance level. That's now probably a resistance level. So that also goes back towards what we were just talking about earlier, which is the ETFs that you can park your money at right now. It's hard to say. One of them could have been TMV, but it's hard to say. Is that going to just top? Is that going to start to recede? I have to do that research. So, we'll get that information maybe this weekend. Gold is at 1845. It recently was 2000. So this was quite the pullback. That's about an 8% pullback for gold. That's pretty fast. Gold doesn't typically move that fast. So there's a lot of changes going on in the market. We have 11 minutes until the market opens, and I can say that utilities were strong yesterday and did better than consumer staples. Utilities were strong yesterday while the market was weakening. So there does seem to be some rotation, if you will. I mean, it's not really rotation; it's a move to defensives, and that move does seem to be into utilities. I also bought some healthcare yesterday, XLV, simply because it's at the bottom of a channel that it's been in. And it's been fairly resilient, so it's a low risk spot to get into XLV. That doesn't mean that you are going to get in and the trade's going to work. If it's low risk, it simply means that the point in which to get out is so close and nearby that when you sell, you will have lost very little. So I think people hear, oh, low risk, oh, good, woo, back up the truck, unload, put the whole thing in there. It has nothing to do with that. That's not what a low risk trade entry means. So this trade, if it works out, will supply supply great reward compared to the risk, because the risk is small. But the risk is not small if you're an idiot. If you have to get out when you're supposed to get out, which is a very low amount of loss, in order for it to actually be the low risk trade setup that you're getting in for. So anyway, that's what that means. And I got into healthcare yesterday on the fact that it's a good low risk entry moment on that trade, that we're at the bottom of this range. You see this? I'm zooming up here in the bottom right. We're at the bottom of this range. We're even below it, which we've dipped below it a couple times before. And this could be a decent zone area to have healthcare. And it might go all the way up to like 142 from here, XLV, over the 126 that it's at, which is like 13% gain. So it's not a lot, but that could happen in the course of 2 months, 2 or 3 months. So 13% gain in 2 or 3 months, compounding, we're probably talking about 50% gain on the year. That's a great spot to potentially park some money. So you see this, these are the things that you want to be looking for, these defensives, the things that are holding up, that should hold up, that are a little bit less correlated with growth. Healthcare is like a utility too, it's a different category. It's medical utility, so XLV and XLU and XLP, are better places to park your money. And then SPY V, which is that's value. That could be all the value stocks like utility and consumer staple like stocks and defensive like stocks that are in the S&P 500. That's SPY V for value. Why not wait for the bounce on XLV? I mean, we're there. We're at that point, and so it's low risk and could bounce right here. It is, in a sense, a little bit of a bottom fishing technique, but why not get in a little bit right now at a low cost average, and then increase to your full position size when you get that confirmed bounce? How about that? And that way your cost average is a little bit better, and now you're in. So that's one of the reasons why it's okay to get in at these low risk entries. And also, it's not Tesla or Palantir. It's not a growth stock, XLV. It's healthcare, and it's not going to be something that's going against this growth recession right now. On that point, by the way, and we have 6 minutes before the open. On that point, by the way, we are in a receding environment of growth based on the quarter by quarter information that we have on GDP in the US. We have contracted, we have receded. So we are, I call that in a recession. I don't need 2 data points. I don't need to wait 3 more months to see if we've come out of that and we're in positive growth again. We're in negative growth on GDP for the United States. And so that is receding. We have receded. We're receding. We've, for 3 months now. BWV, everybody's talking about it. BWV just popped. Hold on. Yeah, BWV just popped over 6.5 from about 6.2 where it was, and if it can break over 7, it'll definitely be moving a lot. BWV definitely one of the ones that are looking good this morning. So anyway, we've got 5 minutes before the open here, and we are in a recession, and everybody's getting worried now. Everybody, finally it's reached the level of everybody, right? You can't really make any money if you're doing what everybody's doing, if you're the average outlook, right? So now we've reached this point where no one can really get a return from the market. The return was when you were smart enough to exit and preserve your capital on November 22nd. That was the moment in which you were the smartest people on the block, and everyone else is just giving their money back. So that's November 22nd, and so we're going to wait for the bottom here. We're going to wait for things to turn around. But once everybody starts saying that we're in a bear market, once we've clicked, and we've basically converted all the bulls. I mean, would you say we've converted all the bulls into bears? No, I don't think we're there yet, because that's the moment. Once the last bull is out of the mark, once the last bull is bearish, that's it. We hit bottom. Until then, I think we still have some people who are going to want to bottom fish here. They're going to want to. There's still people putting money into, Apple, Tesla, Netflix. Everybody wants to buy here, PayPal, whatever it is. We're not at the bottom yet. They're going to get ripped down on some further droppage. And whether that's a shakeout, and so this is the bottom, and whether it's a shakeout and then we come back up, or whether that's a continued trend for a week or a month or another month or two, remains to be seen. But we're at a very good point now where we are about 85% of stocks are bearish. They're underneath their 200-day moving average across the growth markets. And when we hit real single-digit numbers there, where we've got 5% left stocks under the 200 moving average, that's 95% bearish. You couldn't, even if you were wrong, if you planted some money there, you're going to be near the bottom. So you could start averaging in at that point, but let's wait until we get to at least 90% bearish and 90% stocks underneath the 200-day moving average. And right now we are at, in growth, we're at 85%. And in the S&P 500, we're at 26%, 27%. Across all stocks, that puts us at about 20%. So we're not quite there yet. And one of the signals when it's the bottom is, the classic used to be, when the shoe shine boy is starting to say that they've converted to cash and they're all out of the market and all hell's breaking loose in doomsday, right? These days, I think the similar analogy would be, at the grocery market, in the grocery market line. I remember when NFTs were taking off and crypto was taking off like 2 years ago. I remember at the grocery market, every person everywhere, every aisle, you'd hear somebody saying, yeah, no, I'm buying it right now, Bitcoin or whatever it was, that's how you knew that it was the top, and that was like a year ago, wherever that top was. And then that's how you know when it's the bottom, because when everybody feels that they're not going to do anything in the market, then they're out. Everybody's out. There's no more downside. And so that's the bottom. And you might have a little wiggle, you might have whatever, for a couple days or a week or two, but that's going to be scraping bottom. That's when we're there. We're not there yet. No. I see somebody just said he bought 100 shares of Apple a week ago and it's down. Not that he's worried, but but that's a good example. We're not at the bottom yet. All right, 30 seconds before the open. And I'm still bearish on the market. You should still be bearish on the market. We still got room. It doesn't mean we can't have an up day. Let's see what happens. we're getting pretty oversold in the oscillation terms of things, in the trend. But that doesn't mean that we would be in a downtrend, but possibly, we could hit a short-term uptrend very soon here. Okay, market's open. And what's it want to do? Let's see. There was no withdrawals from gold, the institutional ATM machine pre-market. So there might not be buying on the market today. There might be selling. It's an indication that either we're going to be stagnant or there should be selling. The bell of pain. Yeah, I mean, when your outlooks change like that and everything's negative, that's a great example. All right, BWV making its way towards 7. Those are momentum day trade entries right now. ALNA, it's on our radar, but I'd like to see it break 19.5 cents. That's right. Yeah, and we're going to continue to hike rates, supposedly for the next 14 months or so, all the way through to the middle of next year. I don't know if they're going to keep continuing that. We'll see, because you could push us really into a recession. And like I said, I believe, technically we're already in it, to a majority percentage. We're in it 50% or more in a recession, indication wise. Yeah, but then next quarter, if it's negative, then we literally have a called recession. That we can name it. I think we should call it the Fed recession, because it's their fucking fault. They should have been raising rates in November or even earlier, October. They're way late to the game, and they just screwed up the whole world's economy by screwing up the United States economy. Yep. Fed recession. I believe that's what they should call it. Not a whole lot of alerts this morning. It's true. There goes ALNA. It broke over 20. That's an entry for you momentum day traders. It hit 21. So it's a signal on ALNA, ALNA. BWV is not breaking over 7. I'd like to see it break over 7 for us to know that it's a momentum mover. Otherwise it just doesn't have the volume. It doesn't have the interest. It doesn't have the demand to be worth your while. Okay, so at the open here, all indexes are dropping, and the VIX is dropping hard as well, from 34 to 34.5. So finally, we're starting to see some buying of puts. Yesterday was really strange. We closed down, and it was a pretty negative day, and yet the VIX closed up. Very rare to see that kind of a contrary indication like that, but now we're seeing the pickup. Now we're seeing a pickup in negativity on the downside hedging. And I'll have some updated symbols here soon. Usually it takes the first 5 minutes. We're 3 minutes and 45 seconds into the market. I remain short on the Qs. Yeah, I mean, we're talking about the $40 billion thing here now on TikTok. 40 billion sent to Ukraine, and then the same sentence, this person said, but we have vets, homeless vets, and babies to feed. And but the thing is, there's a lot of money for everything. Okay, there's actually not, because we're going to debt, but programs are different programs. In other words, you don't have to have one and not the other. BWV broke 7, everybody. All right, RJ, hopefully you've got a good price entry on that. I'm thinking 6.5 hopefully is where you were at and sized in. Anyway, I'm not saying that we shouldn't be focusing on the baby's food, the food problems, and the homeless vets. I'm just saying, like, there's no correlation, so it's not a logical argument. It's like trying to point something out, but the other side, like Democrats, they just don't care, and they don't see the correlation. Because there isn't one. There's no correlation. So it's not a logical argument. And, you really have to say, like, we should be doing the following. That doesn't mean you shouldn't be doing the other thing. That's not a logical argument. So if you want to say something about sending something to the Ukraine, it shouldn't be that argument. We could have put that money to a different use. It should be, should we or should we not be sending money to the Ukraine based on the need of sending money to the Ukraine? You see what I'm saying? So, otherwise we can't really make that argument properly. You can't argue the argument. But I'm with you. I'm with you. Just that's not how to argue it. Or we won't win that argument. You know what I'm saying? You're going to have to find a different merit where sending money to the Ukraine is wrong. Like literally intrinsically. There you go. I'm not going to repeat that. That's funny. All right, BWV hitting 711 with stocks between $5 and $10 if you're day trading this morning momentum stock. I just got an alert on BWV as well. So that could be an entry for swing trading as well, for penny stocking. So a multi-day trade developing on BWV. This could be a momentum entry point. I was about to say something. Between stocks between $5 and $10, you want to be taking profits underneath every. And RJ knows this by heart, I'm sure. Let's see if we can get an answer from anybody, including RJ, on at what levels do we want to take partial profits on a day trade, momentum day trade, on a stock between $5 and $10, on a stock that's $7 like BWV. You're in. At what points do you take profits? Well, Jack says 50 cents, but that's not quite right. It's almost there. Every nickel. No, that's not right either. That'd be below $2, $3, $1. Mr. M is copying and pasting it from the tiered document, tiered system. Between $5 and $10, profits should be between 5 and 20% exits underneath every 25-cent level. Yeah, and I think that a lot of people will, in the beginning, think every 25 cents from your entry. No. It's about psychological levels, so it needs to be underneath, around every round level, 0.25 level. So at 0.24. And Jack, you'll see, you can multiply that out, like, a stock that's, 1,000, Amazon, for example, you can use those kinds of numbers for Amazon, 21.25. And so you would exit at 21.23, 21.24, and then 21.50, etc. So, it works in different ways at different levels. But generally, once we get over $20, we're setting levels at every dollar. Although you can do some tapering. You know what I mean? So you can overlap it a little bit. Maybe for the first $1, $2, $3 from 20, 21, 22, 23, you could be doing profits under every 50-cent level, perhaps tapering off the size of your exits at those levels. QQQ bearish engulfing, is that right? And we're certainly getting downside right now. No, it's not a bearish engulfing, not on the QQQ. On the 1 year chart. Yeah, I'm looking at it on the daily. Maybe you're talking about the weekly chart. No, it's not a bearish engulfing either. Anyway, it doesn't matter. It's going down. It's worse than a bearish engulfing. We opened, gapped down, and we're moving down. So that's a really strong negativity. We have projected end of day volume that's larger than yesterday. So therefore, the ATR, the move, could be more than yesterday. You can take there's like a quick trick you can do to figure move. You can take the VIX, divide it by 16, and that's what percentage move you're looking at. So, for example, and that would be on SPY, but then you can project it out proportionally by multiplying by like 1.3. So let's get some calculations going here. Where's my calculator? There we go. So, for example, the VIX right now is 34.5. Divide that by 16, and you get an implied move of 2.15% today. So, and it seems to be in the down direction. So now I just go 1 minus on that in order to get what is that in terms of how much of the current price. And so then it's 97.8% of the current price. So now I multiply it by the close, yesterday's close, because that's what it's talking about on SPY, which was roughly 292. And so it says we're going to hit 285.7 on SPY today. 285.7. Right now we're at 285.7. We're already at that. We already hit that number. And now we can get that move proportioned to the S&P 500. I mean, sorry, the Q's growth. I'm thinking ahead here. Trying to get these numbers to proportion properly. Okay, and now that implies a move. Oh, hold on. I was looking not at SPY. I was looking at the Q's. Let's go back on that. SPY. Okay, SPY closed yesterday at 392. Yeah, maybe I was looking at it. It's just a similar number by coincidence. 392 and 292. Okay, 392, which puts us at a target on S&P 500 of 383.5. 383.5. And we're at 388.15. Okay, we finally went back into a realistic spot here. Now, the Q's would be downside target 283.8. All right, so write those numbers down. That is the implied move based on how everyone's hedged right now, based on the VIX. The VIX is implying that those will be our a range. That'll be our range for the day. That'll be our bottom edge. 283 point, what was it, 8? 283.8 for the Qs. All right, Rebecca says that the move might be over on Rivian, but Rivian popped a bit. RIVN. Still going, Rebecca says. Okay, RIVN. ALNA is pulling back. That trade's just about over. BWV, where is it at right now? Yeah, it pulled back significantly, couldn't follow through at that $7 level, came back into the nest. That's what I call that, the breakout region that's below the breakout level. And so whenever it comes back home, go ahead and cut it. It's just not useful to you. If it didn't follow through, it didn't follow through. It's not a momentum trade, right? What are we looking for every day? We're not looking for that. We're looking for DWAC. We're looking for Kodak. We're looking for GME. That's what we're looking for. And it's not it. It's not acting like it. So, stay small. Don't give your money back. What was the number for SPY? Does anybody remember? Somebody's asking, what was the number for SPY? I'm going to write them down over in the member chat area. Price range targets for day. SPY and QQQ. Okay, the QQQ was 283.81. 8-1. And SPY was 383.55. Yeah, 383.55. Unity is halted. Somebody just talked? I heard something. Was that you, Rebecca? No, I guess not. Unity, let's pull it up here. It's a dead cat bounce. Who mentioned Unity? Yeah, it's a dead cat bounce. And below yesterday's high. So this is just hasn't reached a level of interest really yet. Outlook for today. I mean, right now we've found some bottom at 285 on the Qs, 285, and 387 on SPY, and we're retracing some. So we're creating the day's range here, and it could be sideways, could be up, could be down. We don't know yet, but it does look like bad. It looks like down. Stock twits, yeah. Beyond is halted now too. Downside. So Beyond Meat having its first day after earnings, opening gapped down, but now moving up on that gap down. Also, Bros, BROS, if it breaks 19, I can't read that number because of the way these charts are. 19.27. That'll be a pre-market low breakdown. Right now, it's already trending down, so you could potentially take that trade already, shorting Bros, but careful on that because it may not continue. It's pretty funny because everyone was saying that it's the Starbucks killer, and that was one hell of a surprise drop, I'd say. That doesn't really put it in that kind of position, capital wise. Everybody's taking their cash back. Rivian is hitting 23.4 now. If you're, a company trying to raise money, it's really tough now. Outside of anybody giving you cash, you're gonna have to get a loan, and this is not the time to get loans. Okay, CVNA halt. All right. Yeah, a dead cat bounce would. It is a drop with some bounce, but it's considered the trade is over already, and it's just like intraday enthusiasm. Typically, a dead cat bounce, but you can see it also in the daily chart sometimes. But a flat line would be more like a dead cat with no bones or something and no ligaments, and it's just no bounce. Revenge of the vegans. The vegans are rallying beyond. Yeah, I don't think so. It's just a day trade. Ooh, Beyond is back to 25 from 20. And the Qs and SPY have just made a new high on the day. on the day. So they might be putting in a sideways range, indication of a sideways range. Rivian, right now it's at 23, it hit 23.93, just under 24. It's pulling back to 23.6 now. So this could be a sideways day. If we break a new low on the day, it can mean two things at that point. That it's not going to be a sideways day and that we're going to continue downward, and that's now 4 points to a downtrend. Or could be a fake out, fake down, and it comes back up. And then what you see then is typically expanding range, which is called a diamond top or a diamond bottom, which can indicate that we're at a bottom. My keyboard's strong. What did I type? I don't even remember typing something, but it was like. I think that ExxonMobil, CVX, and Devon are in decent risk-reward spots to create an entry soon, but today's candles are not it. Maybe Friday, maybe next week. ExxonMobil, Devon, and Chevron could be at interesting risk points. Am I? That's fun. Rivian, where are you? Rivian's now at 23.27. BWV's hanging out around 6.84. And the other one, ALNA, is all the way down to 0.16 cents. That's way too much of a pullback. AMR, if you're interested in being in that, that's at the buy line right now. Alpha Metallurgical Resources, a coal company, potentially at the a pullback buy line. Can be better to get in on a day that's going up than going down. But perhaps by the end of the day, you could get a really great entry with low risk. What do I think about Tesla? Tesla guidance and Tesla's earnings and revenues are outstanding. They look good, so if Tesla gets into the 600s, that's good. But I wouldn't invest or plant any seeds until we have signs of a bottom. You can't just keep bottom guessing. That's not how you preserve your capital. You need to wait for signals, and you need to take it small at that, and then size up when things start working, and then size up more when they really triple confirm. So the question here, somebody asked, is there any recommendations when to enter the market and purchase? When is a good time? You have to think first from the macro perspective. We're in a economic downturn. That's why the market is bearish. It's not just like dropping independent of anything. We're dropping because the economy is in a tailspin. And so when the economy is not in a tailspin anymore, when the Fed's rate hikes start to slow, we'll know that we're in the bottoming area. Until then, the game is capital preservation. If you have a job, just keep throwing money onto the pile. Keep stockpiling cash. CYN is moving up. Yeah, a little bit, right? Yeah. Somebody else just mentioned that too. Let me see if I can get a closer look on it. Where is it? I pulled it up here. Gosh darn it. There it is. Oh, yes. Moving up to almost $4 now on CYN. Jack, are you here? Yeah, we'll have class tonight. I wanted to explain something now just while it's at the top of my mind, and I might go over it again in class tonight. If price on a day has moved or pulled back, let's say, dropped on low volume, let's say very low volume, then we know that that's no cause for alarm, right? So, therefore, the range between when it was progressing on some previous day, that upper range, and your entry might be in the middle, and where price has come back down to, that's not at an alarming volume, is really kind of the buffer range, if you think of it that way, or the progress range. The progress range, it's that. So in essence, you can learn what the risk is from that. And you can say to yourself, and you can size that 1% risk, or you can use certain rules to check your risks. And you can then use that to reverse engineer again what should be your size on whatever particular position based on how you're seeing it move around safely, right? You still want to be in a stock if it's moving around safely and progressing. If the thing is pulling back and it's not an emergency or against thesis, then that is correct range. So sometimes we learn after we get in that some stocks have a larger range than we thought. And that can mean that you just need to size down a little bit on that, scrape a little bit off. But in some sense, the time to do that is not when you're down, though. Just maybe on the next push. Take a little profit off to size down, get the risk levels right, and that will allow you to tolerate the ranging. Does that make sense? Maybe some other ones who were listening to that was helpful to you as well. That on a swing trade basis is one of the ways you can tell about the health of your holdings. And it may suck to be down on something, but if it's not a problem and it's still progressing and it's within thesis, and yet you're experiencing a bigger loss than you should be, and it's a good indication that you miscalculated the risk on the trade and probably should have sized down, and or you have it right and can stay in sensibly. That's a really good word for it. Sensibly. But some stocks are literally going to, every stock can be a different animal. Some stocks are going to just behave so beautifully and so wonderfully, and other stocks are going to be awful, and yet both of those may still be within the range of thesis. So there's nothing perfect, but you could definitely size down the ones that feel awful, and size up the ones. There you go. Yes, and size up the ones to your normal level that are behaving, right? We can probably talk a little bit more about that in class tonight. What would you guys like, while I've got most of you here, what would you guys like to talk about in class tonight? Focus on. Again, we don't do specific stocks. We do theory, so concepts. And I'll consider them for class tonight. Okay, the market made its higher end of the range there, and now it's coming back down to the bottom end of the range. See what it's going to do. Market health overall, okay. We had a class previously where we talked about market exposure, and that also went over kind of market health, because like right now we're at 0% allocation, all cash, based on the market health check. BUMB just had a big move. All right, BUMB moving. Are you sure that's how you spell it? It's not coming up. Thank you. BMBL. Bumble. I can see why they don't want to be called Bumby. Yeah, if you want more of that explaining strategies, then click the link in my bio. There's some links there to my video lessons. Rivian is now at 23.92. So getting close to that breakout point again. CYN is at about 380. BWV around 670. Sky H is crapping out on the day, cutting below yesterday's low on higher volume. So in case you're in Sky H, that'd be an exit for me right there. Out. Gone. The difference between stocks that behave like you want them to and stocks that don't are massive losses. So if something's not doing what you expect it to do, get out. Because eventually you'll get in something that's doing what you expect it to do. And it's going to behave like that too. And that's where you make your money. The other stuff, little probes, little tests, small tasters, if it doesn't work out, it doesn't work out. Class is always Thursday nights at 9 p.m. Eastern. Okay, Chris. Gotcha. We'll talk about market health a little bit. But, Chris, you probably should also take the market mastery, because there's just weeks and weeks, if not months and months of lessons over there at a very low cost if you already know about it. You completed it? Oh, way to go. Okay, good. Thanks, man. Good. What would you say was the biggest mental shift you had from before taking that to having taken all that information in? What was it? What's the biggest mental shift you think you had? How about all of you? What is the biggest mental shift you've had in trading up to this point, regardless of where you learned it? Gold is dropping to 1837. Energy as a sector, XLE, dropping. However, oil hanging out around 106 pretty firmly. Staples and utilities today pulling back. Where's healthcare? Yeah, same, very similar. All the defensives slightly pulling back, holding. Somebody says trusting a trade, letting it move, and not panicking. Yes. But along with that needs to come a great experience level of when things are not going right. It's easy to trust someone when you've never been stabbed in the back before. But after you've been stabbed in the back, you don't approach that with the same level of experience and trust in a new relationship, a new situation. So it's easy to trust, but when you have had a bad experience or seen something bad, that updates how you trust something, and that can continue. Like, you definitely should be humble enough to know that you could have some Dunning-Kruger, and that you may not know all the ways in which you can get your ass kicked on the market yet. Through lots of experience, I can say that the best trades are the ones that work. It's as simple as that. If you're having something not working, get out. Like, just don't even think about it. Just forget it. Because the best thing you can do is just be in trades that work. And you'll kind of get a sense for what that means. Like, what is it like? Because like you said, you could be in a relationship and there could be a wide range of things going on and you think it's working, like my first marriage for 10 years, there was a wide range of things going on, but yet I made that commitment, diamond hands, and 10 years later, we realized she literally said that she married me to see if she might love me. I'm like, what the fuck? Like, hello, that was my wake up call, my red flag. I was like, whoa, dude. So I snipped that relationship. Like, I didn't need that. And, but yet, see, before that point, I made the commitment, just like when you buy a stock, I made that commitment and I was experiencing the wide range of things going on. And I didn't know that wide range of things didn't lead to, the sunset years, walking on a beach at 80 years old with her, with that stock. I didn't know that range, that there were tons of red flags in there that meant that it would not work out. And it's the same thing with the stocks. You might not know what healthy stock movement is. And but in time you will. And when you've got a really good one, it's like getting that 1 in 1,000 perfect partner. It really is fantastic. And that's all you want. You really want those. And those ones are the ones you hang on to. Yeah, you don't want a high maintenance stock. Yeah, that's just going to bleed you dry. You're going to have to keep putting in on the drops. That's not going to work out. It's hard enough just to stay, what's the word, neutral in a holding, in a relationship. It's hard enough just to be, getting by. You don't need that shit. You only want to be in what's boosting. Outside of that, cut it. And yeah, it's the same with stocks. It's the same with relationships. That's the way it should be. And it's really unfortunate. A lot of people get married, or are going to get married to someone, and all their friends or many friends or some wiser friends are telling them, man, like, you should not get married. This person, I can see the writing on the wall. It's not clear. And yet that new person thinks, you think that, but I think the following. Well, the thing is, you really should trust people who have more experience and more wisdom than you. Hey, the market is starting to move up across the board, broad-based right now. The market is starting to move up broadly on something. I'm not going to say it's spiking, but that is a lot of green bars in a very short amount of time. So something positive is happening. Could be something in the news. And it's not showing up on CNBC, so maybe it's on Twitter, or literally this could just be a little micro rally on the intraday. Rivian is about to hit 25. Yes, and it hit 25. Yes, the Rivian trade still within the path of victory, the pivot point path, using my day swinging method. The current stop on that, roughly around 23.5. Still holding. You never know when it's going to stop, some of these. If the Qs were to rally from here and close up on the day, on high volume, on breakout volume, that could indicate a bottom, a stake in the ground. This could be a bottom right here. But you don't have to guess. You can wait for tomorrow. And by the way, you shouldn't guess, because after a signal like a day like that, where it ends up on the day and it was under, that's like a reversal day. It's a good signal. After that, there's going to be some covering of shorts going on for a few days. And if that doesn't flesh out properly, then it's not going to follow through. It's going to peter out. It's going to drop. So not good to guess. But if you have any stocks that are set up and they are hitting that signal point, I'm not seeing it yet, but if they are, and you want to get in, make sure you get in really small. Beyond halted again? Okay. RJ bumbling with his words there. Beyond is halted again to the upside at 26.35. So Beyond continuing to be a good trade on the day trade. Here it is on the bottom left there. Just been a straight up move. No stress on BMBL. He's like, keep holding. That could end though at any minute. But so far it's been a very smooth ride on BMBL. What's small in percent of the portfolio? Yeah, good question. So if you are working on wealth building, so in other words, making money versus preserving wealth. If you're working on creating wealth, making money, wealth building, then your concentrations are high in the best times, and that could be something like 25% concentrations. That doesn't mean that's your risk level though, but 25% allocations. So, but right now, small might be a quarter of that, or even a tenth. So small, probably a quarter of that. So 6% allocation, not 6% risk, 6% allocation. So, model $25,000 day trading portfolio or portfolio. 25% allocations would be 7.5. Wait, let's see. $6,750 per allocation. I believe if I did the math right there in my mind. And but now you would do a quarter of that just because the market's the way it is. I'm not sure what that is. 3,900 and 2,000. It's something like 2,850 or something. All right, now I want to do it. I want to see how close I am. 25,000 divided by 16. Oh no, what did I say? It's 1,562. Well, about $1,500, about 1/16 of your portfolio. CVNA, yes, is moving up also. There's some good momentum on CVNA. Started the day at around 30. It's now at 37. That's a lot of movement. Yeah, CVNA is the number one on my Momo scanner right now. I'm also seeing BKKT, CRBU. Got to check on those. I'm probably going to check out here in a minute because there's not a ton of other things going on other than what I said. I mean, we're on top of it. But let me check on BKKT and CRBU. App and Wrecker. Okay, that looks great. APP, app. Applevan, what is this? Applevan Corporation with projected very high end of day projected volume on and up day. Looks like day 2 of earnings or maybe day 1 of earnings. And it is a $37 stock, so I'll put that over in Chart Traders Alerts. APP. That's not a Swing 100 trade. That's a vanilla alert. GME just halted? No way. Yeah, JR just said that too. GME just halted. Okay, that's interesting. Doing what? Did it move? Or was it a halt on news before it was even moving? I'm pulling it up. It's taking a moment to pull up. Yeah, CRBU definitely looks like a good momentum mover. BKKT also has some potential. CYN touching about $4 now. That's looking good. BWV still hanging around 6.8. Upstart, dead cat bouncing. The market made a new high. There's a lot of things going up. Funko up a little bit. Sky H crapped out. We're going to take that off of our watch list even. Unity did make some progress this morning so far. It's up about $5 on the day from 30 to 35. And Bros did not break that low. So you can consider getting out of that. Bros doesn't seem to want to move today. GME. Okay, it looks like it halted. It was at 83, and then it started to move in 2, 4, 6, 8, 10 minutes worth of time to about 94.50, and it's halted now. All right, everybody is going to be flocking to GME. Make sure you go and get on that. Meme alert, meme alert. Yeah. Ah, that's why. Okay. TPR. Now I can see some shit here. History. Did you guys let people know in the group about GME? I don't have my high frequency setup working right now. I had to work with support, Dash Trader support. Should have that working hopefully tomorrow, definitely by next week. I don't know what's going on with the halt level. Does anybody know? Does anybody see what the the balances for the projected resume price? Is it a good time to get into NVIDIA? No. I would wait, to get some more confirmation here. Okay, it's resumed. Yeah, it's at 99.75 after being halted at 95. So it's up $5 out of the halt. 99.75 and looking like it wants to break 100. Obviously, that's the level to try and enter at right now. Get in there. Is it halting? I think it just halted again. Anybody get in? Is it halting? It's close to a halt, I think. No, I think it's halted. It wouldn't let you in and it's halting. And if Randy couldn't get in, I doubt any of you could have got in. Damn. Anybody get in? GME. You got in. Okay, good. It's easily going to go over 100. So you should probably set your profit targets already on your position if you got in. We have one person here who got in. Somebody got in at 94.81. Good job. If you got in, already set your exits. So let's say you got in, I don't know what kind of shares you have, what kind of money you have. Let's say you got 100 shares. Now you want to set your take profits at like $104, so just under 105, for about 5 to 20% of your position, depending on how long you want to hold this for. Maybe even smaller if you want to hold this for many, many days. But if it's just a day trade for you, then yeah, 5%, 20%. Oh, somebody got in for paper trading. Yeah, that'll do it. But good job, good practice. But as you can see, about 98% of the people weren't able to get in. So welcome to the frustrations of the real world. Right? I'm up 80% on CLEU, CLEU, China Liberation Education. CLEU. All right. By the way, what's your name, Lisa? You should change the amount that you're paper trading with to be equal to the amount that you would be trading with. Because you don't want to be teaching yourself that being up X number of dollars or down X number of dollars is okay or bad. You're going to get into a habit and you're going to train yourself incorrectly. So you want to size your paper trading account to what you would be really trading with when you eventually become trading with real money. So that you can get used to, a $12 loss, that's bad, or, $1,000 loss is nothing. All these things could be incorrect. And you won't know it, and you'll be training yourself to have an emotional response to the wrong information. All right, anybody got indication on GME? The hell is it? I'm looking at my charts. There it is. It's way over there, you guys. I'm going to try and get it a little bit bigger for everybody. Let's bring up the 15-second chart on GME. So it went. What's the news? Why did this happen? Let's see on StockTwits while we have a second. Saying. Halting because they can't control both AMC and GME simultaneously. Trying to buy through Merrill, getting error statement. Everyone trying to make up the shit coins losses. So the movement. Beyond is halted again. What's it at? 27? Beyond 28. Apple moving up. The market just rallying here. We should be coming out of the halt on GME soon. Remember to, if you've already got a position, to set your take profits or a portion of your position, no matter how small. Okay, awesome. Dagger. Was that Dagger? Okay, we hit 108 and it's halting, I believe. $108. It's easy to sell during an up halt. You should be able to sell some. And then anybody else getting in? Anybody else get in? Be able to get in, buddy. But that's the break over 100. That's the majority of the trade right there. Getting in under 100 and getting some out over 100. That's the key level trade right there. Who knows? Maybe it'll do more, but at minimum, you should master that. You should be able to do that. Awesome. Already took into profits. Excellent. Tooken. That's a English word. Tooken. Already took in some profits. Anybody able to get in on that? What is that? Second halt? Somebody got in at 102.95. Okay, good. So now you need to set your exits for the next level, which would be under 109, 110. So 109, 108, 109, 109.50, something like that. Take a percentage out. Randy got 103. Good job. Yeah, it's about exactly where this other dude got in as well. Sometimes I think Thinkorswim may not allow you to set a market buy order during a halt, but I believe you should be able to set a stop limit order. And then if you just set your limit really high and it lets you, you should be able to get a fill instantly. But yeah, it's definitely a dangerous game. It could resume from this halt to the downside. You never know. But usually not. There's enough volatility here on GME and enough demand that this could push up further. What is the news? Could just be a Wall Street bets squeeze. How about AMC? Is that moving, guys? AMC may be following in the same proportion. AMC was at 11 when this started, and it's hit almost 14. Okay, that's a huge. I think that's a larger percentage. So there's definitely a trade going on there. And look, AMC is pulling back. This could be an indication of what's going on inside the GME halt. So GME may open lower. GME may open at like 100, one somewhere around there. Still might get bought up and move. But either way, be prepared. Oil now hitting 100 and almost $7 a barrel. Okay, we're going to resume the halt in a moment here. Yeah, costs. Cost not moving too much. AMC is, and GME. An infinite number of times, Frank, the reason for the halt is to control excess volatility, so like massive moves, basically to protect investors. People could lose more than they have if they're short something and it doesn't stop going to the upside and it goes to like the GME to 1,000. Like that can't really happen, but because of halting. But without halting, it could. And so somebody could lose, then be on the hook with their brokerage. Maybe they started with a $100,000 short position, but they could be in a situation where they owe $10 million to their broker. It's just not enough time to act. So it's a bit of a safety mechanism on the market, and vice versa. Regular losses on longs. It gives you a chance. It also, they want you, they basically want you to do your research. There it is. It opened exactly as I said. Well, actually, it opened at 108 and then moved down to 102, and it's halting right now at 102. So everybody's probably trying to get out right now. Whereas this could be a good time to buy if you didn't get in and you want it at 102. You have seconds to get in. Randy says he got filled at 108 for his exit. All right. Yeah, thanks. Unity keeps going. Almost going to be breaking over 37 soon, following the pivot point path, PPP. DWAC is up 2% on high volume. AMC, the big movers right now are Beyond, GME, and AMC. Beyond with that just straight line. Very nice movement on Beyond Meat. The Dow dropping pretty hard right now, breaking a very short-term intraday pivot. And that would be a sign of either a head and shoulder pattern forming or double top. So this could be the top of the market right now. Yes, BMBL and beyond, really smooth trades, really easy. You could be adding on at advantageous points with a low feeling of risk. Want to see what happens next on GME. You can get a sense for that on the non-halted follower, AMC. AMC is pushing down a little bit further and starting to pull up. It's kind of like leveling off. So we'll probably open right around where we are. It's like a hidden, transparent view at what's going on with GME here in AMC during the halt. So that's a great way. That's one of those tips that I've picked up over the years. Figured out. One of those things I've figured out over the years is a good tip, probably. Find out what's going on in the halt. If there's any other sympathetic stocks that aren't halted, they might be telling you. So to me, I'm going to guess it's going to open around 100 and start testing 99 and start testing breaking down. That's what it looks like to me. So whether, if that happens, that's probably what it's going to do. And that's like right around where you want to stop out, then you should be setting up your orders as such. But where does that look like on the daily? It's not that big of a deal, frankly. But it could be the start of a multi-day run. I'm going to go put it in penny stocks. Why is it not typing? Okay, we should be coming out of the hall any second now. I believe I didn't take note of the time, but I believe it's coming up any second here. And a quick indication over on AMC is down. Down. So GME might even open up at 97, 96, 95. Quite low. I think it's going to open right around here, 96. Relatively speaking, if I'm just using my visual proportional ruler. That might be enough with VWAP and moving averages for it to find bottom right there. Okay, it opened at 100 and then dropped to 96.50. It's now at 97, 96, 95.74, 96. Okay, it's bouncing off of that trend line there, pushing all the way up to 99. But make no mistake, it's down from the top, from the peak. So these are sort of secondary trades now. We are sitting on the backside of the move. Whether or not that's going to hold, fade, or pick up again, hard to say. I would think hold probably is what's going to happen. It's going to hold these levels in the 90s. Maybe test around and create an ABCD pattern moving into the close. So this could be, anywhere in the 90s here. It could be a good spot to average into a multi-day penny stocking position on it. Tesla is currently 733. It touched 697 or even lower, I think, pre-market. The market is showing a head and shoulder pattern forming as a double top, triple top on the day, intraday. These could be the highs of the day. You can learn about the ABCD pattern that I'm talking about in my video lessons. Just click the link in my bio. Too much to explain. It's all there. Whole video lesson for you there. And if you don't, go ahead and click that link, or if you don't go ahead and go through with that, it's still the same. It's too much to explain right now. The answer is up to you. I guess the short story short is after a large smooth move, there's some pullback that's above 50% retracement. It holds a level for a while, maybe all day, and then starts to curve up and re-break a particular level to go further to create a new uptrend. Okay, there's some large volume coming in right now, buying on GME, but it may not be enough. The people who made money on that run and sold out to the buyers with less money are keeping that money. So that's why this is not moving again. They're keeping a portion of that money. Percentage-wise, the trade is over. That's why it takes the ABCD setup for it to build up over some time and happen again. All right, you guys, I'm going to take my first break on the day. I think we're pretty on top of everything here. There's a lot of little opportunities you got to be watching if you're a day trader. We did not yet still have any real significant alerts, but I'll put them out if I find any. All right, see you in the group. And you guys, link in bio. Learn to trade, come join our group. Click the link.